Alright everyone, welcome back to another episode. If you're new to the channel, welcome to the channel. Hope you enjoy your stay. Let's jump right into today's video. So, in this video, I've got a bunch of bullish short-term signals to talk about. We're going to be continuing what we talked about from yesterday's video, seeing how what we talked about yesterday panned out. Like I said, we're going to be looking at the short-term chart. We're going to be moving over to some bullish technicals, talking about some continuation in the whale buys that we talked about yesterday. Then we're going to be moving over onto some macro charts, talking about what to expect in the next coming weeks. And we're going to wrap up the video talking about the Bitcoin supply last active 1 year ago. We're seeing some really bullish implications over on this chart here. So, like I said, we've got a lot to talk about today, so let's just dive right into the content. Now, in yesterday's video, I'm going to do a quick summary for those of you who didn't watch it. We were talking about basically the bullish implications of all the technicals we were seeing at that moment in time. If I hide these EMA ribbons temporarily so you get a little bit more of a clear view on what we were talking about, we were talking about the fact that we had a breakout of this asymmetrical triangle right here. Let me highlight it because I know it's a little bit hard to see on this chart. We had this asymmetrical triangle. We were consolidating. We had a fake out to the downside, and this was a failed move. As I always say in my videos, a failed move equals a fast move in the opposite direction. What do? We had this failed move, didn't hit the price target. We broke all the way up to the top of the asymmetrical triangle, came back down, back tested at a support, and started to head up. While we were holding it, we were also holding, if I highlight it here, we were holding the 618 Fibonacci, which is perfect. We were sitting on the golden pocket for a multitude of days, and with these candle body closes, we also more or less held the 13 EMA, which is another very bullish implication. We were also talking about yesterday a bunch of whale buys that were coming into the market, and I'm going to continue talking about the whale buys that we're seeing in just a moment. But at this moment in time, in the short term, we have broken out the top of this channel, 30,700. This is exactly what we predicted in yesterday's video. We were talking about all these bullish technicals that I just ran through. I said that I think in the next 9 days specifically, and I'll talk about why specifically. If you're a veteran to my channel, you already know why. Coming into the 15th, I think Bitcoin is going to rally up to 34,000, potentially maybe even 35, 36, but maximum I don't see us heading above 38,000. That is when I'd start deleveraging some of my risk, and I'd start to move over into a more risk-off phase, because I do expect Bitcoin to come down to 22,000. I'm going to talk about that towards the latter half of this video, but in the short term, continuing from what we talked about yesterday, we saw a huge spike in the volume over on Coinbase. And forget about the spike in volume we saw on Coinbase today. We saw almost, well, 4.6, 4.7k worth of volume traded. That's not what I want to talk about. If we head over to Bybit, I'm going to talk about some bullish technicals we've got going on. But look at this volume candle down here. We had 38.595k. So basically, let's just call it 38.5k Bitcoin bought in a single 4-hourly candle. And you can see how the price reacted to this. We had a massive run up. The last time we saw bullish engulfing volume candles like this, we saw these two, overshot it a bit. We saw these two giant bullish candles right here. And if we look around about this market structure where we got these buying volumes coming in, you can see we got these were basically buying the dip. And because of that, as I always say, volume is predictive of price. And because of that, we had a big move up. I don't want to call it a massive move or anything, because, it was a 16% move. It was pretty nice. But in theory, we've really just been trending sideways for the past month or so, a little bit less than a month. So looking at the technicals as well, like I said, we had a fake out from this asymmetrical triangle. We broke up to the top of it, back tested it. That was a failed move equals a fast move in the opposite direction. The price target of this asymmetrical triangle, you can see if we extrapolate this price target right over to here, we have a price target coming up to 34,000. 34,000 sounds familiar, because if we head over to my other account over on Brave browser, 34,000 is this major area of support. I do definitely think we're coming up to 34,000. In fact, in the past couple of videos I've been doing, well, really for the past 2 weeks or so, I've been talking about how 34,000 is my minimum conservative target for Bitcoin to bounce to. I find it much more likely Bitcoin's going to move up to 35, 36, maybe 38. I'm less convinced about 38. I'm more shooting for around about that 35 to 36,000 before I start deleveraging myself from some of my trades, because like I let you know, I believe it was down here, the 23rd of May, maybe it was on the 30th of May, but it was around about this time we were putting in 9 red weekly candles. And when we opened the 10th candle, I was letting you know I made a video 2 weeks ago called Bitcoin bounce into June or pump into June, relief rally into June, something like that. You can go back and check it. But I was saying how I think that we're not going to be putting in 10 red weekly candles. I think we're going to be bouncing up to 34, 35, 36, and maybe even 38,000. And that is what we're starting to do, which is very nice. If we look at the weekly RSI, we are starting to turn up very strongly. I have pointed this out before that typically when you do see the RSI and the weekly turn up, you normally do have a big move because it takes a lot of momentum to shift over the weekly RSI and make it move up. Bear in mind, I do want to differentiate between the lower time frames, because the lower time frames we're seeing so many bullish signals, it's looking great. The higher time frames, I do think we're going to pump up into the 15th, which by the way is the FOMC meeting. And then I think we're going to dump down to approximately 23,000, which roundabout in the next couple of months will be the where the 200-week moving average is lying. A couple more technicals before we jump into the macro charts and the Bitcoin supply. You can see that we've got this huge W pattern playing out. Now, I know a lot of people aren't particularly fans of W patterns that look like this. Some of them, some people wouldn't necessarily consider this to be valid. I definitely consider this to be valid. 32,000 would be the neckline of this W breakout target, and if we extrapolate the price target of this, let's drag this over, let's see where this would take us up to. This would take us up to $36,127, which I could definitely see coming into fruition. Like I said as well, you know, I know a lot of people aren't necessarily fans of W price targets that look like this, so let's take this micro W pattern for those of you who don't want to consider that a valid price target. Although, like I said, I would definitely consider that valid. It's a very clear W to me. If we pull this over, you can see the micro W breakout would be running us into the 200 EMA. This is obviously going to be a big area of resistance coming in at 31,700. You can see we crashed against this before. This was the top over here. I don't think there was anything else that we ran into. Let's draw a fib from the high to the low. So we came up, no, we didn't really get rejected from any fib of any importance. So it seems like it was the 200 EMA. So getting above 31.7 and then pushing above 32,000 is going to be imperative. I'm definitely looking at a couple of long positions. Like I said in yesterday's video, I would be looking to make a long after we break out of 30,700, but I specifically said we would need to have a throwback, we'd need to back test it, confirm it as support, and then move up, because previously you can see, you know, we've done this, we break up, come down for the back test, we fail it. We break up, we come back down for the back test, we fail it. And I do think, you know, it's baked into technical analysis, the more and more you come up into a support or resistance zone, the more likely it is to break. So I do think we have solidified the breakout. I do definitely think we are going to be breaking up to the upside, but I would definitely like to see a throwback to 30,700 before I do make a 10x leverage long. That is what I see happening in the short terms. Like I said, beautiful amount of volume coming over in on Bybit and Coinbase. I wouldn't be surprised if we do come down a little bit before we do start to run up a little bit more. That's what I really want to see. The 4-hourly RSI is quite overextended as well. So yes, this could definitely go sideways and push up a little bit more, but I do really hope that this does come back down to 30,700, so I have the option to make a long. I won't be too worried if I do miss out on this, because like I've been saying to you guys for the past couple of weeks, I have been loading up on spot Bitcoin, and I am gonna I might deleverage myself a tiny bit in terms of the risk as we come up to 38,000, as I do think we're coming down to 23,000 now. We talked about the W breakouts, we talked about the bullish signals that we saw yesterday, we talked about the whale buys coming in over on Bybit. I also want to talk about what to expect coming into the next FOMC meeting, because I know there's going to be some of you who are maybe new to my channel in this video, and I just want to quickly show you If we clean up this chart, remove the drawings, the last FOMC meeting, by the way, this is the Federal Reserve meeting where they're going to be talking about the interest rates. Now, the last time they had an FOMC meeting was on the 4th of May, and you can see this was when they increased the interest rates by 50 basis points, meaning that the cost of borrowing money basically went up by half a percentage point. Because of that, the markets reacted very, very negatively. We literally dumped 36% the day, well, not the day, I mean, you know what I mean. We started dumping the next day, and within a week or so, yeah, approximately 10 days or so, 8 days, we did come down, and we came down, you know, 36% down to 25,000. And I definitely think something like this could play out again coming into the next FOMC meeting. The Federal Reserve Chairman Jerome Powell and a lot of other, you know, people within that, they are talking about basically saying it's 100% likelihood that they are going to be increasing the interest rates. If you head over to the CME futures page, the Chicago Mercantile Exchange, and type in Federal Reserve interest rate calendar, you'll see that they're predicting 100% likelihood of another interest rate hike, which has never historically panned out well for the market. So this is why I think we're going to break up coming into the 15th. So my opinion, which has been the same opinion for the past couple of weeks now, is we are going to be breaking up bullish for the next 9 days. Coming into the 15th, I imagine Bitcoin is going to be sitting at around 34 to 38,000. I said that right? 34 to 38,000. And then I think coming into the 16th, maybe the day after the FOMC, because bear in mind, previously we pumped into it for some reason, which doesn't really make any sense. So maybe expect a pump on the 15th, but coming into the 16th, I do think we're going to be having a pretty solid move back down to the downside. Before we check out the supply, let's check out what's going on the total crypto market cap, because both the total crypto market, well, not the altcoin market cap, but the total crypto market cap has had a relatively strong bounce from the 618 Fibonacci. Now, at this moment in time, we are basically still sitting in this bear flag. I mean, depending on how you draw it, you can draw it like this. I'll probably leverage it up like this now, because it looks like there's more touch points over drawing it this way, but we are still within this bear flag, so we do need to be cautious. I wouldn't be surprised if we do break out, maybe head up to the 0.5 Fibonacci. Let's see how far this would take us up in terms of valuation. We could see approximately 300 billion flowing into the markets in the next 9 days or so. I wouldn't necessarily be counting on it too much, because like I've been saying, I am calling for a macro move down to 23,000. I previously said 22,000, but bear in mind, this price is literally going to change every single week. You know, previously, the week before, this was, like I said, 22,300. Now coming into this week, it's 22,400, and you know, coming into the next week, it might be 22,600. The week after that, 22,700. So I do think by the time we get down to the 200 week, it will be coming in at around 23,000 quickly. For those of you who don't watch my channel or who are new to my channel, why do I think we're coming down to 23,000 on the 200 week? Well, this was the candle body close bottom on the March 2020 scare. This was the exact bottom over in the 2018 bear market, and once again it was the candle body close bottom on the 2015 bear market. You can see I'm specifying candle body close because we did have a wick to the downside, but in terms of weekly candle body closes, it has always been the 200 week, which is the bottoming signal. One other thing I'd like to point out is when we divide Bitcoin by the M2 money supply, another way of saying this is basically we're including inflation when we're quantifying Bitcoin. So when we look at BTC USD, I'm sure everyone knows that there's been a lot of money printing in the US in the past couple of years. Because of that, a lot of the asset classes have been moving up very exponentially. So when we do divide Bitcoin by the M2 money supply, so we do account for inflation, you can see Bitcoin has already come back to the 200 week. It's already held the previous all-time high, and it's currently pushing above the previous all-time high, which is a really bullish signal in of itself, like I said. So, you know, my macro perspective, I think we're pumping up to between 34 to 38k, coming down to 23k within the next 9 days. My micro perspective is that we might be having a slight pullback to 30,700. Maybe that's just Maybe that's just my gut saying that because I want to make a leverage trade, so take that with a grain of salt. But I do think the general direction in the next couple of weeks is that we are going to be heading up to some of these higher price targets. Some other price targets, the micro W, like I said, 31,800. The neckline of this macro W is 32,000. If we do break 32, then we've got a lot of confluence coming around with 34. Like I said, 34 is a massive target over on this macro chart, and in this micro chart, the asymmetrical triangle breakout is 34,000. I definitely think we're heading up to 34,000 within the next 9 days. However, macro time frame is unchanged. We are still bearish. Let's wrap up the video with two things that I want to talk about. One is a warning sign in the short term. Like I said, I think we're moving down in the next couple of weeks, so this is kind of akin to that. And then I want to talk about the Bitcoin supply last active 1 year ago. So there's not much to talk about in terms of this chart. You can see we've got this little key down here. The blue line is the Bitcoin supply last active 1 year ago, pretty self-explanatory. And then the orange line is basically the Bitcoin price. So Bitcoin divided by the US dollar. You can see, this was our first bull run, second bull run, third bull run, fourth bull run. A lot of people don't consider the 2011, 2015 or 2013 bull run to be bull runs. I do. But what I want to talk about for this is the Bitcoin supply last active 1 year ago. Another way of saying this is, the amount of hodlers holding, because, people like myself, they've got, hardware wallets where Bitcoin has not been touched for over a year. We are breaking into all-time highs in terms of the Bitcoin supply last active 1 year ago, which is great. It means a lot of people, bought a year ago or bought 2 years ago, 3 years ago, 4 years ago, and they're not touching their wallet, which is great. You can see at this moment in time, 65.51% of people in the Bitcoin network are hodlers, which is incredible. I mean, we've never seen these we've never seen these type of numbers before in the market. And historically, if we look back, you can see that there's basically three big peaks, or you can call this one the fourth, but let's talk about the implications of the past three peaks. You can even consider this a peak. You can see we had a big peak and we continue to run up. We continued running up in the Bitcoin price. The supply at last active a year ago started to go down, which means that hodlers were selling, and that is when the price started to capitulate. Once the hodlers or the Bitcoin supply last active 1 year ago started to move up again, it peaked as Bitcoin was sitting at around this kind of region around here, and we kept on moving up after the Bitcoin supply last active 1 year ago peaked. Once again, you can see Bitcoin hodlers increasing again. This moved up to just above 60% of Bitcoin hodlers. And this was, more or less the bottom. You can see it doesn't exactly correlate with the bottom, but in fact, a lot of these peaks do correlate with the bottom. Like this one here, this almost exactly correlates with the bottom. This peak in the Bitcoin price almost correlates with the bottom in terms of hodlers. But apart from that, when you see the inverse, so for example, the peak in terms of hodlers, it doesn't always equate to the exact bottom in terms of the Bitcoin price. A lot of the time, you can see, we peaked here, but we've actually bottomed in the price over here, and we peaked here, but we bottomed in the price down here. So this is a macro signal. Don't expect this to have any effect on the immediate price within the next couple of weeks, but this basically means that the amount of Bitcoin hodlers at this moment in time in the past, holding their supply for more than the past year, is around 65.5%, which is really incredible. You can read a brief description of it here, but I think I basically quantified it or explained it well enough. But that's basically the Bitcoin supply. Seems like there's a lot of hodlers at this moment in time, including myself, which is great for the price. I think this is going to heavily contribute to when we're able to, have that next run up in terms of the bull markets. One bearish signal I want to talk about before we do wrap up the video. Let's check out the dollar first. Dollar's just pretty neutral right now. We're kind of sitting on the last legs, but we did have a nice bounce last week, which is not good for the stock market. But what I do want to talk about coming into the stock market, if you're wondering why I'm talking about the stock market, it's specifically because Bitcoin is correlated to the stock market. Historically, the stock market starts to move up, Bitcoin starts to move up, the stock market moves down, Bitcoin moves down. You can see quite recently it's been moving down, and then very recently it's been moving up, and that's exactly what Bitcoin has been doing. So the stock market at this moment in time is in a huge bear flag. Let me remove this so you can kind of see. If we draw it like that, you can very much see that we're in a huge bear flag. I'm going to keep it how it was because I'd prefer to look at this as a channel, but nonetheless you can recognize that we are in a huge bear flag for the SPY. I'm not even going to extrapolate the price target of this breakdown. I don't think we'd be going anywhere near that breakdown. However, it is just important to note that we are in a pretty shaky trend right now, so do be cautious. To wrap up the video, like I've been saying, there is a lot of whale buys coming into the market right now. We have just broken out of this sideways accumulation range that we've been stuck in for the past month. We also, in the past couple of days, which is what we talked about yesterday, we broke out of the asymmetrical triangle, we back tested it, and we started to move up. We had a fake out to the downside of this, which means that we're very likely to continue this fast move and head back up to 34 to 38,000. But bear in mind, we are not out of the clear yet. I do think we are going to continue to go down over the next couple of weeks. So bear in mind, 15th to the 16th, I think we're going to pump up to there. So I'm still predicting us to move up to 34 to 38,000. Coming into the FOMC meeting on the 15th or the 16th is when I think Bitcoin is going to start capitulating. That's basically all I've got for you today. Hope you found some value in this video. As always, not financial advice. Cowboy out. Peace.